Hello students, today's topic is accounting equation. That is, there are a lot of assets. We have already learned that for a business organization, there can be various assets. So the assets are resources owned by a business. And in the diagram, you can see few examples for assets. That is cash, accounts receivables, vehicles, store supplies, equipment, buildings, land, and notes receivables. Accounts receivables means that means the total of your debtors, that is by way of sales. You might have given goods on credit and the amount receivable by you from various debtors or various customers will be grouped as accounts receivable, and under that you have bills receivable. Now we have already discussed what is bills receivable. That is, if you have written an agreement between the party who has to give you the amount, then that becomes a bills receivable for you. Bill of exchange, we'll call it as bill of exchange. So the other name for that is notes receivable, bills receivable or notes receivable. Next, the liabilities. Liabilities are the creditors' claims on assets. Like you have various types of liabilities. Accounts payable, that is whenever you have bought goods on credit, you have to pay them back. So the total amounts payable represents the accounts payable or your creditors. Taxes payable, wages payable, notes payable. Suppose if you have taken loan, bank loan, then that is also a liability. So bank overdraft is a liability. So a lot of liabilities are there for you. Next comes the equity or the owner's claims on assets, owner's capital. The other name for that is equity. So capital, that is whenever the owner is putting in amount into the business, then it is known as the capital. And sometimes he may withdraw from the business, that is known as drawings. And when in the accounting equation, whenever you are having an income, that should be added to capital because that will go to the owner, no? And all the expenses, that is the business, whenever it is meeting the expenses, that should be deducted from the capital. So we are going to see the accounting equation. Keep in mind, whenever you are having revenues or incomes, that should be added to capital, and all expenses should be deducted from capital. So meaning of an accounting equation. Accounting equation is a mathematical expression which shows that the assets and liabilities of a firm are equal. So we have seen the duality concept or the principle where we said that the debit balances will be equal to the credit balances. That means the accounting equation, through an accounting equation, we are going to prove this. That is, all the assets the total of the assets will be equal to the total of liabilities of a firm. And as we have told, it is based on the dual aspect concept of accounting. That is, every transaction has two aspects, debit and credit, and that tends to be equal also. So for every debit, there is a credit of equal amount and vice versa. So after every transaction, your debit should be equal to credit. And the effect of transaction on accounting equation. That is how you will be making the accounting equation. First of all, you need to analyze the transaction in terms of such variables such as assets, liabilities, capital, revenues, and expenses. So we'll be following the modern classification of assets like as assets, liabilities, capital, revenues, and expenses. Decide the effect of the transactions in terms of increase or decrease on variables mentioned in 1. That is, first of all, the first point is we'll classify the various accounts into these heads. Okay. Next comes how that is going to affect these variables. Okay. The liabilities, the assets, and the capital, and record the effect on the relevant side of the equation. So the accounting equation is assets is equal to liabilities plus capital. So in this lesson, in this class, we are going to just see how the how the accounts are classified. So classification of accounts. So when you get your textbook, you will see illustration 1, where you will have to classify the asset. So today we are just going to see how to classify the asset. The first one, cash account. That is, we have learned two classifications. The traditional classification as real, nominal and personal, and the modern classification or the American approach as assets, liabilities, capital, expenses and incomes. So in the first problem, we'll see both the methods. That is, we have to classify cash account. Cash account, according to the traditional classification, it is an asset account. That means it is a real account. Okay, all real accounts represents assets accounts, right? So a cash account is a real account, and according to the modern classification, it is the asset account. It will fall into the asset account because that is an asset account. Wages account. Wages account, all expenses account will be classified as nominal account. No, so it is a nominal account, and according to the new classification, it is expenses account. Okay, capital is the capital introduced by the owner. So according to the traditional classification, all accounts related with people will be dealt as personal account, and according to the modern classification, it is the capital account. Goodwill is an asset account. Yeah, I told you it's an intangible asset. So it is classified as real account because asset account, no? So real account, and according to the modern classification, it is the asset account. Bank, the same rule, that is, it is the asset account. So according to the traditional classification, it can very well classified as real account also. Next is the second question in your text, that is purchases. That is, there it is wrongly given as, I think they have given it as personal account, but it's not. It is an expense account. Okay, it's an expense account. Purchases is an expense for you. Rent outstanding is a liability account because all outstanding amounts will be liabilities for you, payable amounts. It is due but not paid. But if the question was rent account, then you will classify it as an expense account because that is already paid. So you will treat it as expense account. But here it is rent outstanding. It is due but you haven't paid. So it's a liability account. Sundry debtors account. Sundry debtors means, sundry means total. Okay, so at the end of the year, you will find out what is the total amount of money that you will have to get from the various debtors. That represents the sundry debtors, total debtors. So all the debtors means you have to get money from them. So it's an asset for you, asset account. Now depreciation is an expense because depreciation means any expense, any part of your asset which you have written off because there is decrease in the value of asset. So depreciation is an expense for you because you might have bought a machinery for a particular amount, and at the end of 1 year, say you found out that the value is less, or wear and tear has happened to the piece of machinery. So you will write off that particular expense. Okay, so that's an expense for you. That's a loss or an expense for you. Drawings is related to capital account. So in illustration 2, we have just classified according to the modern approach. Hope this much is clear to you. And find out, if you are having your textbook with you, you can go through that particular part in your textbook, go through that, read and do the problems. Even otherwise also, both the problems are given in this PPT. You please copy this into your notebook. Please do it on your own. Okay, this is just to classify it into various heads. And in the next class, we'll see how that will become part of accounting equation. Thank you so much. Hope you understood and enjoyed.